going to start right now. All right. Good morning. Good morning. Good morning, everyone. Good morning. All right, guys. So it is now February 15th, 2022. Good morning and welcome to Beyond Charts Morning Brew. We have waiting on some CPI or PPI numbers, which is a cousin of CPI. And let's see what's going down here. Let's see what they're saying. The numbers did come through. I did see it over the wire. Producer price rise. So they did rise. Estimate was 0.5. They came up at 1%. And here are the numbers now. Let me see if I can make this louder for you guys.
It is up 1%. That is much bigger than we anticipated. And just to put a face on this, the up 1% is the second highest month over.
Dow is going up.
Because, of course, if you look at the final read, 1.2 from January of last year was the all-time high, up 0.8 when you strip out the all-important food and energy. And that is
So PPI 1%. We wanted to go up 0.5. So again, the cousin of CPI. This is producer price index. The cost of the producers is gone up for the producers.
It's up 0.9. 1% is the high water mark from last January. We're expecting up 0.4 there. So anybody who's looking at the month-over-month and year-over-year making comments.
All right, guys. So this is just the news that's come out through the wire as we speak. Again, it's
Year-over-year, up 9.7%. 9.8 is the all-time high going back to record keeping, which was changed, so it goes back to 2010. So 9.8 was November. This is 9.7. 8.3 on year-over-year core.
all right. So let's get the gist of it. Numbers are out. Let's see how the market's reacting. And let's just check it out. All right. So today, PPIs come out, producer price index. The cost of what's costing producers to make products has gone up. We kind of expected it to go up. It is a little bit higher. So again, what is the Fed going to do, right? So it's gone up to 1%. That's pretty high. We expected 0.5. Ultimately, what we're going to do right now, we're just going to see how the market is reacting at this moment of time. And let's see. So we're going to go to E-minis right now, as expected. I'm going to show you right now. The E-minis are pulling back. Now, we did rally overnight. Now, the E-minis is basically the SPX, but it's the futures of the market. So just seeing it. This is the 15-minute time frame, hourly time frame on the future on the E-minis. I'm just going to make the 15-minute time frame a little higher. We're going to be looking at the 1-minute action. Now, we are a little bit delayed here. It is 8:23, so we're delayed about maybe 10 minutes. It isn't so bad, but as you can tell, the markets declined a little bit here on that news. Let me just check here. Futures, yeah, they're declining now on that news a little bit. All right, so again, we're gonna see where these things line up, but basically, I wanted to share this with you guys. Yesterday, we had our momentum trading class and we identified what exactly to be looking for. And I'm just going to point this out because this is exactly what we're looking for. So if anything out of that class that we want to get and we want to start salivating is I'm going to point this out because it's when you can observe and see these right here, when you see that right there and you see that right there, that is now this trade you could have taken it unless you're trading overnight because this happened at 3 a.m. So, but anyway, sideways market, we get a reaction, and boom, it's off to the races. And this is the moves that we're looking for in any time frame. Now, this happened on the 1-minute time frame, but if I go into a 15-minute time frame, you're going to see the exact same thing. And it's right there. Okay, so right there. So a little bit easier, and you can see it clearly. We have that sideways consolidation, moving averages, and then we have a break of a 0, and this is exactly what we're looking for. Here is the bear trap, what we discussed yesterday. So the video is up for you guys if you want to watch it. It's right there, and this, when it breaks through there, this is where you're going to trap the bears, and it takes off. Anyway, but who else is out there? Hey, James, what's going down? Good morning. There's one gigantic hammer, 2 candles back on ES. Excellent. Excellent. So, yeah, but this is exactly what we're looking for. So, ideally, wanted to share this with you. So, if you see this, you don't need to trade every day. You don't need to just, if you can sit on your hands and wait, and you wait for this, exactly, this setup, this is what we like to see, okay? And this is, again, we saw it on the 1 minute. We see it on the 50-minute. I'm just going to see if we see it on the hourlies. And again, so the hourlies, you don't really have it, but on the hourlies, like I said yesterday in the video, the price is probably going to go to the 50. In this case, it went a little longer. It looks like it's got a little more juice, and the PPI numbers are right there. Anyway, just wanted to share that with you. But let's go into where we are at exactly in the market. So I want to discuss a few things with you guys today. So ultimately, what are we looking for? We're looking at the overall markets. Good morning, Skates. What's up, buddy? What's up? All right, guys, here it is. The market has a few issues, right? So we have a lot of weight right now. Whether you want to believe it or not, we have to take news of the headlines that are being narrated to us or projected to us, right? What are the headlines? Well, one, the Fed. We know the Fed's been on there. People are for it, not against it, whatever it is. We do have the Fed minutes coming out on Wednesday. We have to pay attention on Wednesday, 2 p.m. The last time Fed Chairman Powell spoke, you know the story. It declined, okay? And the market right now, I think it has priced in 4 or 5 basis points of rate hikes. I think that's already baked in. What's not baked in is the uncertainty. We have Bullard came out, and it's pretty interesting. You have to ask yourself, is it strategically this way? You know, I said something yesterday in our education class yesterday, and I said, you know, the system is rigged, and I don't mean to say like it's rigged like conspiracy theory. I just say that it's rigged in the sense that when you trade the markets, it's very opposite of what we think it is. So we have to start looking at it from a hedge fund perspective. And in the video, I gave a good description of how to really look at it like that way. And this is why the system that we teach is basically is going to help you with that. That's why the 50-day moving average is a very vital, especially when there's algos out there, you know. So the algos are meant to, you know, get in and out, or get institutions in and out at a good price undetected. And they work very, very well. So strongly encourage everyone to watch the video. It's already posted up on Patreon. So watch it. But all right, so what are we looking for? So we have the Fed, we have yield curves, right? They're rising 2%. All right. The Fed, basically, their job is not to protect the middle class, the lower class. Not, you know, they're going to protect themselves. So remember that they're just wanting to get out of this unscathed for themselves as much as possible. So remember what they're invested in. They're invested in ETFs. They're invested in mortgage-backed securities. So again, they're not going to do anything to, you know, unless they're protected, to affect those securities they're invested in. So now the yield curve is slightly going higher, but they can't make it go up too high because they also owe a lot of money. And again, if it goes up too high, then they're going to have to be paying a lot more money than they're ready to pay at this moment of time. We also have supply chain issues, which is causing inflation, which ultimately is taking money out of our banks, right? You're losing buying power. Your dollar just lost about 30%. You know, believe me, go down to the store, find out, take the $100 bill, look at your receipts from a year ago, and you can see that your $100 bills is buying less groceries. Your $50, you're probably paying double in gasoline prices. You're paying more for your real estate. You're paying more for gold. You're paying more just for everything. It's just eventually a matter of time that, you know, the producer price index just came out. And also what's happening is that the producers are going to pass the price on to the consumer. And we see that already happening when you look at the earnings that's come out. Like Chipotle, they're passing now the cost of inflation to us, right? That's ultimately what's happening. So little by little, this is going to start chipping away. And ultimately, you know, this is why we have to pay attention to the markets. Gasoline is going up. So supply chain issues are not getting better. Hopefully they'll get better. But these are the things that are weighing down the markets. Now, when I said that, also, these could be the positives because these are the weights that are weighing down. We also have the Russia issue, which Russia equates to energy. Okay, that's what it equates to. Energy, realistically. So now, Russia pulled out. They put their trucks, as of today, the last hour, Russia pulled out. They put their military trucks, and they said they're ready to talk and so forth. So at this moment of time, that's a less of a weight that the markets has. The PPI headlines came out there. Let's see if that can rally. But But right now, as far as the XPX, the Nasdaq, and the Russell, let's take a look here and where we're at. So we came down a little bit. We're right below the 200-day moving average. A big buyer came in yesterday, and I pointed that out in the video, right around 43.65. So that moving forward is going to be a big number for us on the XPX. If you're trading spiders, just eliminate a number, and it's going to be 44.36. Okay, right in there, 436, 435. I think it has maybe a little bit less than that. The MACDs are going to maybe not cross, but bounce a little bit here, but we're still below zero. So let's see, it's probably going to rally. What I stated yesterday is that we're probably going to rally today. We're going to rally Wednesday, 2 p.m. We have the Fed minutes. We have to pay attention if we're going to continue the rally or not. And then maybe decline. What I've noticed, and I'll show you when I get to the VIX, but right now, the upper side is going to be 44.54. Why is that? Because that's where the 200-day moving average is located. So we have to watch that. Okay, so let's see if we can, let's see. Now, if we break above that, then we're probably going to go in the range that we were in last week. Remember, we broke this range last week at, 44, I think it was 44.50 up to the highs of 45, 45.50. So again, we can now consolidate in that range. The market is range bound until something breaks. The QQQs, we rallied yesterday. That's a good plus. Again, we can probably bounce higher, and let's see if it's good. The good news is that they didn't really sell off tech as bad as we thought they would. But again, and this is just going for this week. IWM rallied as well. Let's see how that holds, but everything seems like it needs to rally. Now, remember what I said in the video. I said we sold off pretty hard on Thursday and Friday. Remember, nothing goes down in a straight line. So we need the algos. The way they work is that they need to now, remember, their job is to get the best price for their client, and their client is institution, is hedge funds, and pretty much it works like this. Is they'll say, hey, we need to sell 5 million shares of XYZ stock by the next 2 weeks within these certain prices. Okay. The algo's now job is to do that. And with that being said, they know exactly where your stop loss is. Okay. And they're going to take you out, and they know where we're going to react to. Right. So again, as far as the VIX, let's go into the VIX. The VIX, like I said yesterday, and this is the VIX, the VIX, and this is something we noticed, and I talked about this. Remember, the VIX, we set the barometer for the week. So this is Monday. Monday was 24.7 to the highs of 32. If we look at the overall weeks, we're at the high range of the VIX, meaning that fear, the amount of puts is at the high side. Now, if this follows suit like we did the last couple of weeks, which is very simple, we're probably going to go to, we're going lower. It looks like we're going lower. That means the market is going higher. So are we going to stay range bound? Is this going to go lower Tuesday, Wednesday, and then guess what? And then Thursday, Friday, we go higher. If that follows suit, because that's what's been happening in the last couple of weeks. Thursday, Friday. This came out higher Thursday, Friday, not too high, but we were already pretty high. Thursday, Friday. Do you see the pattern here? And here we were already high. So we went up Wednesday, Thursday, Friday, we stayed high. Here was Thursday, Friday, we based and went higher. So again, for the last 1, 2, 3, 4, 5, 6 weeks, 7 weeks, that's roughly just under 2 months, where volatility has gone up. Let's see if that happens this time around. Okay, the Treasury notes above 2%. The market needs to get used to that. They said it's probably going to be at 2.5 by the end of the year. So we'll see how the market's going to react to that. But usually that's bad for tech. And ultimately, it's not that it's bad for tech. It's just basically that the market needs to be comfortable with that. So again, if interest rate starts rising, what does that really mean? It means that they're probably going to be tightening credit, right? And if companies get tightened credit, they're not going to be spending much, and basically becomes more and more difficult to people they're going to halt spending, right? Banks are not going to tighten their lending. So again, that's one of the reasons why we're observing the credit at this moment of time. Again, and this is very similar to what happened in 2008, 2009, 2010. So again, nobody really knows, but this is why we're going to be watching like a hawk. All right. As far as the XPX, on the 50-minute time frame, we are rallying. And I said yesterday, again, this is where the sell-off occurred. Yesterday, we rallied. I thought we were going to head up to the 50-day moving average on the 50-minute time frame. And we're on our way. But then right around that 1 o'clock, 1:15, the news hit the wire of Russia, the news hit of some sort of invasion or military, something happened on the news wire, and we dropped dramatically. What I noticed was that right around 2 o'clock, 3 o'clock, right around 3, well, that's 4, 15 is 3, right around 2 o'clock, a big order came in. And that wasn't normal people. That was a big institution. That was a black box that came in and held the market up. So again, we're going to identify 43.64 as a place that they came in and it was bought. So ultimately, the market needs to rally because, again, it sold off too hard. Remember, we sold off, guys, from this moment of time, from 45.56 all the way down for the last 3 days to 43.64. So that's roughly around 200 points of a sell-off. And by the way, if you follow the system, and I shared this with you in the video yesterday, this was how we trade here at Beyond Charts. In the Momentum Trader, this is exactly what we're looking for. Broke the 50, and that would have been a 200-point return or 200 points decline. How much of that 200 point would you have gotten? I don't know, 10, 50, 100, whatever you wanted. Now, ideally, I'm just going to demonstrate this to you. This is exactly how we like to trade because it also coincides when I tell you that this also, when I told you that it aligns with when it aligns with the 15-minute time frame, aligns with the hourly time frame, or break of the 50, you load the boat there, right? Because you're catching the momentum to the downside. Just broke the 50, it is going to go down. So you had two confirmations where we say, yes, it's about to go. And this is exactly, if you just sit around, just wait for this setup, and they occur not every day, but they will occur maybe once a week, maybe sometimes twice a week. But, again, this is when you can sit tight, and this is exactly what we look for, either up or down markets. Now, what's coming up here? All right, so just want to demonstrate that to you, and I'm going to point that out every time we see it because I want you guys to just train your eyes to see the opportunity. So, again, as far as where we're coming, we're probably going to come up to the high side here. We're looking at, let me see, 44.47 right now. So we're coming up to that 44.50, which is exactly where we were right in here, 44.50, which is 44.60, 44.50. And I think did I draw that on the, I think I did. Let me see. Yeah, I did. So 44.50. So these are the boxes I drew for the week yesterday on the E-minis. So what are we looking for? Again, 44.50, 44.60 is going to put me right in the upper range. 4,500 was the high side for me to be bullish. But ultimately, this is the range I think we're going to be in until we break 4,500. Now, here's the thing. If any of those headlines that I mentioned earlier, 44.51, thank you, James. Any of those headlines go away, right? Let's say that supply chain issues are getting better, then we rock it. That means we have two weights that's weighing down the markets gone away. So we got Russia gone away. We have oil, getting better. The Fed, if they come out very dovish, right? And again, I'm talking about this week. I'm not talking about in the future. I'm talking about this week. If the Fed comes out tomorrow and the minutes come out positive, then we can rock it. And how we know if we're going to rock it? If we start breaking above 4,500. Okay. And that's going to be, let's see here. 4,500 is going to put us, 4,500 is going to be right in there. Then that can lead way to 4,600, 4,600 and above. Then we know that we're back on track, that we're being bullish. Do I think that's going to happen? Probably not. Also, there's been a lot of speculation that would Russia start a war or diplomatic? I think there would be more diplomatic, but again, I just need to throw this out there so you can be prepared. Would Russia start a war during the Olympics, right? And the answer is no. They're in Beijing. Now, just note that the Olympics end Sunday, February 20th. Also know that Monday the markets are closed because it is a holiday. So again, so come Friday, we're gonna have to be prepared just in case anything happens, maybe with some protecting puts. Hang on to the show, and I will show you exactly what I'm gonna do. Not to be a conspiracy theory, but just to protect their accounts. But we're going to find out where the overall market is. And after all the information, we have a big macroeconomic week coming up ahead. Okay. As far as the XPX, looks like we're going to open up right around that 44.40, I think 44.51 currently. Again, that's going to put us at 44.60. Just at the 50, we'll look at the MACD, see if they have some juice, and maybe they can go higher. And then we'll see. If we start going higher, then more than likely we're probably going to go back. This is the hourly, head back towards that 50-day moving average, which is around 4,500. If that's the case, that'll be amazing. And hopefully this will set us up for another one of these, maybe up or down. Okay, so we wanted to go up to the 50-day moving average. Let's see if that is the case. Now, why the 50? Because this is where the hedge funds do their magic, right? This is where they unload, load, unload, load, unload, load. Because right now, as they bought puts, remember, here's the lowest probability to buy your puts because you're too far away from the 50. And what do I mean by that? As everyone's buying puts, they're selling it. They're buying calls, or they're, as you're selling, shorting it, they're buying it and driving it up. So again, the 50-day is going to be a good barometer for you not to be whipsawed. Okay. All right, so right now for today, we're looking for an upward. Let's see how high we can go. I expected that we're probably going to chug away, hopefully up into that range. Watch the MACDs and watch the 50-day moving average. Let's see if we hold. Right now, we're going to work above it. Let's say we come back and retest. Now, if I look at the 1-minute chart, and I don't have the numbers here at this moment. Actually, at the end, what I'll do, I'll look at SPYs, and we can probably set something up. We got the VIX. Bitcoin rallying, guys. Again, that is an entry. As I said yesterday, if you trade this system in any time frame, that is an entry. We broke above the 0 entry right there. Again, good, high probability trade in this time frame. If you're looking at the weeklies is starting to rally. No, there's some resistance at 47,769, but it looks like it's coming to the end. If this starts moving, it's going to add momentum maybe to the upside. But again, we broke the VWAP. We're breaking. They're adding positions to Bitcoin. We saw that here, and we saw this here, and it's starting to rally. So, and again, right there, we're going to have some headwinds right at that 46.08. Just know that. MicroStrategy should be moving with Bitcoin. As you can tell, is up a little higher, 416. This might be a trade here. I'm going to see if it is trading. It was trading alongside Bitcoin. It looks like it is, so we'll see. Ethereum starting to break the 0, so that is a go. Okay. As far as momentum trades here, we're going to be looking at the momentum trades here and see what's potential movers here. All right. So right now we're at the 50. Let's see where that works out, and the NASDAQ and the IWM. Go Google, moving. I need to point this out, and I pointed out in the video. So Google moving, again, that's a positive. Google starting to rally. Let's see how Google looks here on the hourlies. And Google right at that hourly. Let's see if it can take out. Does it have legs to go up to 28.27, 28.50? I don't know, but it looks like it wants to go. So let's see if that is a something that is possible. But Google is rallying pre-market, okay, midstream. Let's see, is it going to pull back? All right, it looks like it wants to pull back on a 1-minute time frame. Let it come back. Let's see if it can come back to 27.22, 27.25. The rally moved too much. Again, we don't chase it. Let it come back. So again, just let it come back. Let it come back. Let it come back. Let it set up. It will bounce, and they'll take it a little bit higher. So watch Google. And Google, I want to share this with you guys. And I share this with you. If you're trading Google, this was something very unusual yesterday. Google was consolidating. Now, this is the 1-minute time frame. Google never does this. Never does this. But when it does, when it picks a direction, it's going to move. And you had a nice move here. Unfortunately, you have to sit tight and look at Google. I explained that in complete detail in yesterday's video. So I highly encourage you, look at the video. It's on Patreon. Okay. So we have that. Okay. So Google looks like it can probably set up. Let's see. Let it pull back a little bit. Amazon trying to pulling back. It rallied really nicely. Rally from 31.10 to up to 31.75 pre-market. Let it pull back. Let's see how far it can come back. It looks like it probably wants to come back to around 31.50. And let's see how it reacts there. MACDs need to pull back a little bit. Wait for the setup there. But if it bounces, it's probably going to go up to 31.75. You got 31.84, 3,200. And then on the downside, again, anything's possible. Just know you got 30.53 and 3,000. But it looks like it wants to rally. Tesla rallying. Now, I talked about Tesla. Tesla did rally. Buyers are coming back in. Now, the one thing I talked about Tesla too in the Patreon class, remember, Tesla spent about 15 minutes below $800. Okay, so what does that mean? That means they're buying it. Okay, whether you like Tesla or not, it's a good company. It's being absorbed. People are buying it. Now, it's in a range. It's in a range, right? So 950 is really, really hard. It's a beast number. I described in detail what the beast number is, but watch it. It's in a range between 800 and 950. So again, just watch Tesla. If they're going to start building a position, wait for it to see how it reacts around 887. It needs to pull back a little bit. ISRG getting close to a move. Again, the moving averages are all tightening up here. This is exactly what I like to see. Something big is around to happen on ISRG. Watch it at 282. It can either rocket. It needs 286 to rocket it up to 294, or is it going to go down? 279 is going to take it to 275. And then you have about 271, and you have 261. CMG moving pre-market. Again, this has been consolidating sideways. There's a beast number up there on CMG, and the beast number is this 1607. There's two. There's another one up here. There is that 1616. If it can get through that, it's going to rocket. Now, how are you going to trade that? If you're going to trade it, just know that there's probably going to be some selling pressure at those levels. So you can just maybe take it to that level. If it breaks through, just then roll up. Okay. But for the most part, again, if I'm talking bullish, it's probably going to be for today, tomorrow. But just know we have some news coming out that could potentially hurt the market. Okay. What else do we have here? Let me just go real quick. Lam Research, this is a positive. So they're taking back the good stuff. Again, this is what I mean. All the moving averages are lining up. This is something big that's about to happen. This is what I noticed with ISRG. So again, Lam Research moving. Okay, starting to move. They're building a position. This is what I mean. Momentum has been coming up to a point, and it now needs to explode. So again, set it up properly. Too far away from the 50. Let's see if it has some legs to move. We have Goldman Sachs setting up. Let's see if that can move. Again, so these movers might happen for today, maybe tomorrow. Netflix has a big number up at 409. Can it get going? Possibly, but let it come back. Roku has earnings on Friday, Thursday. So let's see what Roku do. Is just kind of consolidating. NVIDIA, this is the one we have to watch. If NVIDIA goes up and they have earnings, this is a positive. Now, here's the thing about NVIDIA. If NVIDIA comes out and they say, hey, we're having issues with supply chain issues, we can't get the parts to make the chips, this could probably crater the semiconductors. But if they come out and say, hey, supply chain issues are under control, we're doing pretty good, we just, making a lot more money, then this could explode the chips. Again, nobody really knows what NVIDIA is going to say, but just know that on their earnings call, if they say something very positive, then that could bring up all the tech. So watch NVIDIA and the verbiage they use on their earnings call. Mercado Libre, working sideways. It's going to try to rally. Let's see if it wants to keep going. So you got 1163 on top, setting up. Apple. Now, this is what I liked about Apple. Even though Apple broke 170, it quickly reclaimed above 170. That's a plus. Even pre-market, it came down to 170. 170 is a line in the sand. I think that if it can stay above 170, the market's going to do really well. If it breaks below 170, it could take down the markets. Right now, Apple wants to pull back to around 169, 170. Shopify working its way lower, pulling back. Okay, let's look at this. I'm going to just go real quick. All right. Trade desk pulling back. Affirm, again, remember I told you, consolidating, garbage company. Not a big fan, never was. But again, it's a mover. They've been taking it up and taking it down. They've been selling their rip. These guys come out with earnings. I have not gotten into the earnings yet. I'm probably going to do it this weekend, but watch this one. This one's probably maybe can go lower. It's trying to base, but it's consolidating sideways. A big move is about to happen on a firm. So watch it. Right now, I would say negative. If it breaks 44 and takes out 43, it's going to drop lower. Maybe I think $10, but just, watch it. Upstart coming out with earnings this week. Pulling back. Watch it at 107. Let's see what happens. 111 to get it better. And let's see. HubSpot consolidating. Big moves happening at HubSpot. Can go to 572 or 526. Right now, 550. So you got 25 points on HubSpot minimum. It's not going to stay in this range very long. Again, Zoom trying to work his way higher, consolidating sideways. Needs 147. 144 is average. Maybe can go down to 139 sideways. Bookings, again, they took it down yesterday and it remained down and never came back up. To get it better, needs 2581. It's right there. It can go down to, if it continues downtrending, 25.15, and if it takes that out, it's probably going to go to 24.73. So you got a mover in bookings, okay? Booking is a mover. If you're not afraid of movers, then that's fine. ServiceNow working his way higher, and this is exactly what I mean. Consolidation of the lines is breaking up. It's breaking up. This is when you see the consolidation of these lines. I talked about this yesterday in the class. This is expect a big move, and this is why I shared with you that a big move is coming and it's already happening. Let's see how this follow through. A pullback is imminent, but maybe set that up. Coinbase should be working up because Bitcoin's going up. Pulling back pre-market. Let's see how it reacts around 200. Is above 200. Can they hold 200? And then if it can get above 204, it's going to rocket. Not rocket, but 207, 216. And these are all for this week, guys. This week or today. The chips. All right. The chips are back. Okay. It's all about NVIDIA this week. Roblox is coming out. So again, I think that pick your poison here. We have INTU, Qualcomm, ASML, AMD, AMAT, Broadcom, MU, Roblox has earnings. If NVIDIA and Roblox says anything positive about the chips, these are going to skyrocket. These will skyrocket, okay? So, and when I mean skyrocket, you're going to make some money on these things. So pick one. These options will be cheaper because they don't have any earnings. But NVIDIA has earnings. Those options will be more expensive because they expect a big move. Okay, let's go into the SPY. So for this segment, we're just going to cover SPY, QQQs, IWM. Those are cheaper options. You can choose to do XPX, RUT, whatever you want. It's both the same thing. But I'm going to cover any potential opportunities here that I see. So let's go to SPY. And SPY, we're looking at the hourlies. No, this is the 15-minute time frame. Let's go to hourlies. And we're looking at the 15-minute time frame. Okay, so we're looking at spiders. And spiders gives me the pre-market action. So again, on the hourlies, on the SPYs, we're right at that 447. Currently, right now, the spiders are at 444. 447 is the 50-day moving average at this moment in time. MACD looks like it wants to go a little bit higher. On the 15-minute time frame, SPY pre-market hit 446. So that's going to be 446. So it's pulling back right now. Let it pull back. Let's see if we can set up. MACDs are coming to the end, so we do not want to take any positions there. Let it pull back. Let it set up and see what happens here. Let it set up properly. It's probably going to come back to that 441, maybe 440. Let it pull back. Let's see where the 50-day is going to meet up, and let's set something up there. But we're coming close to the 50, and we're coming close to the 50 on the 15-minute time frame. And the on the hourlies, on the QQQs, we're at the 50 on the hourlies. That's a plus. Okay, we just broke through, but this happened pre-market. There's a lot of buying pre-market coming here. We're right at the 50 at 352. 15-minute time frame needs to pull back. If it can pull back at 352, let's see what happens. Maybe this rallies today, but something big is about to happen. Let's see what happens around that 350. Now, on the upside, if it can take out the pre-market highs, which is 355, more likely it can go to about 360. Again, 360 on QQQs. If we start breaking down 350, there's some buyers that come in at 347. 343, just giving you the downside. I think that we're probably going to rally into tomorrow. So again, this might be the opportunities here. IWM. Okay, close to the 50 on the hourlies. On the 50-minute time frame, we're pulling back, coming to the end. So let it pull back. We rallied nicely into pre-market. I think that the market is dissecting. So we're looking pretty good here. What did I look at? Let's look at ISRG because I saw something kind of building up there. Okay, so Putin is supplying gas to Germany, long-term basis. That's a good thing. All right, ISRG coming close. Let's see pre-market what happens here, but we're coming close. Big move is coming. Let's see if it can come up. Let's see how these moving averages wind up. A big move is coming in ISRG. Okay. Coinbase. Okay. Pre-market. Let it pull back. Let's see what happens at that 200. Again. All right, guys. I wish we had more. That's all we got. It is right now 9:07. 9:07. If you guys want anything, I could look at anything. ES, gigantic hammer. All right, futures are declining right now, but these are delayed. So this is 9 o'clock. So I'm about delayed about 7 minutes. So again, futures are pulling back. Okay, so we're pulling back. So that means right now 4444. We're going to be opening at 4454. So 4450 is where we're going to see. Okay, so Putin is speaking. So the PPI numbers are affecting the markets. That's what we're seeing, a pullback. So again, let it pull back, let it set up, wait for the proper setups, guys. Okay, all right, guys, that's all we got. I'll probably pop into TradingView at lunch. I'm going to be looking for Diago at 12:45 if it turns on. If it turns on at 9:30, more likely it'll turn on at 12:45 and then back at 2:45. There's one algo that turns on around that time. So we'll be looking for that. Go out there, go get it, guys. Stay calm, stay collected. Remember, we're going to capture these waves. Wait for the proper setups. And again, don't get caught in the FOMO trades. And go out there, go get it. Go get it, go get it. God bless, God bless, God bless. Don't chase, let it base. And again, remember, there are four things that are holding this market down. If one of these things goes away, then we're going to skyrocket. If one of these things go away, we're going to skyrocket. Okay, or maybe one or two or three. But pay close attention to the news, and we'll see. All right, guys, take care. God bless, and we'll talk soon. And we'll see you tomorrow.